day. Ira Epstein with your financial market wrap-up for this Monday, the 11th of June, 2019, just after 4 p.m. Central Daylight Time. So we've got the settlements in. It was a mixed day. You had the NASDAQ up on the day, but you've got the other three main indices down. The metal markets had a small rally, but the end of the day quotes were slightly lower than this in the silver probably down closer to 1472.5, and gold probably around 1331, not much lower. But we were down more than this in the energies. We were down in the WTI and the Brent about 20 points apiece here. They settled, remember, they settled much earlier than they finished trading. And the reason they were down is we got the API numbers, and as you can see, the oil stocks built at nearly 5 million barrels again. We built the gas stocks up about 0.83 million barrels, but we did see the distillates, which is another word for the diesel, come down 3.5 million barrels. But I didn't like this. Crude oil stocks are still building in Cushing. The week before they were 1.4 million, now they're up to 2.4. That's going the wrong way if you think about it. So now the question is, how will these markets handle all that? As we take a look at a weekly area chart of closes, we've had a nice rally. We are up for the week at nearly 11.9 points in the S&P. When we step over and we look at a daily bar chart of the S&P, you can see how the market came up, and today was what we call a reversal day. You made the highest high of this whole leg, took out the previous high, took out the previous low, closed lower on the day. So what we have is an outside day down. On that, now, you look at today's high. If it's taken out, it could be a bear trap for that day and propel the market into this resistance area. Or is the market going to stall out here? We'll find out as time goes on. What we're also looking at is if the market slips back, where support might show up. And two zones, actually three zones, really show themselves. The 18, the 100, and the 200-day moving average of closes. Those would be the support zone. The resistance is the upper Bollinger Band. You just missed it today by 5 points. You got up to 29.1150. That number's 29.1650, and the market finished down. So even if you take out today's high, you're faced with that Bollinger Band right over you, and that makes it a little rough of a trade for the bulls, because often the first time you hit a Bollinger Band, you get a reaction the other way. It doesn't always work that way, but more times than not, if you go on your chart and you look at it, you see it's a zone of resistance. And the reason is that the algorithm that the Bollinger Band is, the idea is it's a resistance spot and a support spot. The bands do not run parallel to each other. The math doesn't work that way on them. In terms of momentum, you are overbought and nowhere near the process of beginning to convert from overbought to locking in another up leg of the market. You're just overbought into a resistance area that has a pattern of a lower low and a higher high. And after, in some of the cash markets, 6 days in a row up, you gave back a little bit. In the NASDAQ, you closed higher on the day, as you can see. So this market's continuing with the pattern of, though, the lower low, higher high. Is it going to reach into the Bollinger Band? I don't know. But like the S&P, you've got three levels of support, the 18, the 100, and the 200-day average of closes. So those levels are what I look for if you break, and you break hard, to be the support zone. In the Dow, the market gave you a reversal. Now, if we look at yesterday's high in this market, it was 26,289. Today was 22,261. So only the S&P so far has had that higher high and lower low. This is just a normal market that's, after it's hit a Bollinger Band, correcting from it, overbought, again, not trying to convert anything, and you've just come from this 24,610 level, so it's one heck of a ride that this market has had. When we go to the Russell, this is an outside day down, supports the 18-day average of closes. Unlike some of the other markets, you have a pattern of higher lows, higher highs. This is the support zone. You're not overbought, so it would not surprise me that the bulls try to support the market at 1511.80. If you get under 1488.80, though, you got a problem in the market. You break the pattern, and you probably, because you're under all that at this point, the 18, the 100, and 200-day averages, you start getting more of a downside momentum build. In the VIX, back to neutral. Market's fighting a battle against the 18-day average of closes. It's finding support at the 100. You had today what we call an outside day up. You took out yesterday's low and high, closed higher on the day. If you take out today's low, well, then I look for the first key moving averages, and they're so close, I admit that, the 100-day and then the lower Bollinger Band to be the support. And I'll say it again, if the market goes to the lower Bollinger Band, I would expect the first time it goes there, the pros to sell puts, trying to get back up into between the 100-day and the 18 to cover those. In the bond market, you can see that you're getting a gradual move, an attempt to break down. You lost the embedded reading on the close. Now, the first day you lose a reading, you can gain it back the next day. But if you lose it today and it stays lost tomorrow, there's a problem. The market did some good action, though. By it finishing where it didn't stay in the bottom quadrant of the day's range. So it's going to be easier for this market, if it opens steady to higher, to attempt to regain that bullish reading. I think that right now you've got the bulls nervous in this market. In the 10-year note, you lost the embedded reading as well. You can see the market finished up about 1.5, and I can tell you the last trades of the day were not up 1.5. They were lower than that. So we've got a higher high, lower low, a correction. When you lose an embedded reading, I look for price and the 18-day average to make a run at each other. Now, you've lost the reading here today. You didn't lose it yesterday, so tomorrow's going to be key. The 5-year note lost it yesterday and today. In TLT, you've lost the embedded reading, and when we come to that, did you lose it yesterday? Yes. So you cannot get it back. So it puts into a higher probability the idea now that because the market's overbought and it cannot regain the embedded reading for a minimum of 3 business days, that the odds favor the market's going to try to work itself down to get rid of the overbought condition. It could all be in one day, it can be over a series of days, but I do look for price in the 18-day average to attempt a run at each other. In the dollar index, you can see the market's oversold. You've got the pattern of lower highs, lower lows, support in between the 100-day average, see the green? Bollinger Band. If you take out yesterday's high, that would be Monday's high, and that would be 96.89.5. I need glasses here. That could get you into a short covering scenario here where this market picks up a little bit of steam and tries another run to the upside. So I think the bears have to defend not letting that happen at this point in time. In the eurocurrency, it's going to be the flip-flop. If the market takes out 112.96.5, you could end up with the pattern lower highs, lower lows, setting up a challenge below you of the 18-day average of closes. You are in an overbought condition, the flip of the dollar in the oversold condition. The British pound continues this churn against what I call that line in the sand, and as you can see, your Bollinger Bands, because of that churn and lack of volatility, are moving in on price action. So you're getting your resistance falling and your support from those two numbers coming at you without a trend in the market. In the Japanese yen, another small down day, and as you can see, the market's overbought, trying to turn momentum down. Support could come in at the 18-day average should the break continue. I say should because you still have the pattern of higher lows and higher highs at work. So you've got the bias up, momentum down, everything's sort of fighting each other. In Bitcoin, this rally's interesting because it carries you now back towards that 18-day average. Should the market take out 81.75, it gets interesting. If we look at this break low, the break low was 74.35. Market then rallies, comes down, hits a low of 75.15, and then comes up. So you've got higher lows, you've got lower highs, you're narrowing in. Should the market get up over this 81.75 and stay over there on a closing basis over 80.70, you could turn the trend of the market back up, the bias up, but you still got to work on this momentum, which is trying to point down. In the August Brent versus WTI crude, we're going to get in the morning, as you know, at 9:30, the EIA numbers. We've already just seen the API numbers. Now we'll see if they jive with each other, if they're materially different. We have a pattern, though, that I look at here where the market's got a clear pattern of lower highs on a closing basis, but because the market's staying over the 18-day moving average of closes, the bias stays up. When we come to the crude itself, lower highs, lower lows. The market lost its embedded reading right here, so the odds still favor an attempt of price in the 18-day average to try to make a run at each other unless you get through these lows first. In the August WTI, lost the embedded reading. You can see that right through here. And how many days have you lost it? Well, yeah, you lost it there. Both numbers under it, both numbers under it, both under. So you had your embedded. And today you lose it on the close. Now, the only time you can get it back is the day after you lose it. So tomorrow's either a confirmation day that it stays lost and you get momentum picking up, or it's a confirmation where you re-embed and then you put the market back into another down move, the potential for it at least. Rebob gasoline, you lost the embedded reading. This is a seasonal time of year too, where gasoline often gets a bump. Now we're going to see wholesale gasoline prices next week, probably across America, take a dip. It takes time between when you get this type of break in the futures markets and in the crude, because crude's what it's all based on. And as this comes down and you take a little bit of a lag by the time they refine and move it out. So they're saying across the country we should get some lower gas prices next week. But again, that's old news. You're looking to see what this market can do here. And downside momentum is in jeopardy after this big break with resistance back at the 181.40 level if you keep the embedded reading away. If you get it back, bearish again. You didn't lose it in August natural gas, so even though you got a rally today, I think the pros are selling that rally, trying to see if they can get more of a break, and the 10-day forecast does not look very, very hot at all. It looks still pretty mild if you're keeping up with it. You know, I talk all these technical terms, and a lot of you like primers on them. So we have, via our friends from the old Futures magazine, Guide to Technical Indicators, volumes 1 and 2 that they had published. We redid them, if you will, made them modern looking for you, put them together in a PDF. Each one's about 23 pages long. They explain all these different titles that you can see coming by on the screen. If you'd like a copy, simply go to our website, www.iraepstein.com. You'll see a carousel of free offers. Sign up for that. We'll have it out in the mail to you right away. You can also give us a call at 866-973-2077. Have a good day. See you tomorrow.